Hello, everyone. My name is James, and I'd like to welcome you to today's webinar. We're going to be talking about financial literacy and growth, and we will try to uncover the secrets to scaling a business in Africa, right? So just a bit of housekeeping for, I think a couple of us might not be very used to the Zoho webinar platform. If you're probably joining in on your mobile or on your desktop, you'll be seeing some buttons like the Q&A, the polls, and a hand raised, right? So the raised hand is basically for you if you want to ask a question, but you can ask a question in the Q&A session. So that's like basically the chat box, right? And then we'll definitely get to you. Maybe you have questions for the guest of today, or any other thing you want to basically get some answers for, right? We'll also conduct some polls during the webinar that would encourage you to participate in, just to get your feedback and opinions. And lastly, this webinar is being recorded, and that's for us to be able to provide, these resources to you, the attendees, and those that are unable to attend right now. And we also like make it available on our social media platforms for like on-demand views, right? So yeah, again, very warm welcome from myself. My name is James again from Bujeti, and we have some distinguished guests that will be joining us today to basically share a couple of things with us. And this is basically our agenda for today. We're going to be talking about financial literacy for sustainable growth in Africa. We'll have a panel session just immediately after, where we're going to have our guests to share some insights on how to navigate challenges to drive growth in Africa. And then we'll move to financial tools and resources. But all the while, you can always keep dropping your question in the Q&A section, right? And we'll be able to assist in answering. Right, so I would like to move into introducing some of the distinguished guests for today. Very senior people in their fields that we're having. Okay, we have Samy. Samy is the COO and Chief of Funds at Bujeti, right? He has very much of a lot of experience running businesses in different parts of the world, actually. We also have Kolade Adewoye, who is the CEO and founder of Fusion Intelligence. And we have Gerald. Gerald is not here right now, but he will be joining us very shortly. He is a tech ecosystem builder. He was he was also like ran companies that have been acquired. One of his company was acquired in the past. So he speaks from even both the founder and operator angle on how exactly you can run a successful business in Africa. So yeah, okay, yeah, I think Gerald is going to join us very, very shortly. So I'll also so just for everybody else, like I was saying, these are the distinguished guests that we have today. This is Mr. Kolade Adewoye, 3X entrepreneur. This is what he says. He loves to solve problems and basically impact value in his field, and he has like various interests in a lot of different things. Kolade, thank you for joining us this afternoon. Right, and we also have Gerald Black. I think he should come and tell us why he calls himself Gerald Black, because that's not definitely his surname. But when he joins us, he'll give us a bit of why. He wears black a lot. So I think maybe that's one of the things. He's a one-time exited founder, like I said, and he's a tech ecosystem collaborator with multiple years of experience. And he has a strong passion for connecting, entrepreneurs and operators and founders with investors and all. So it's someone you probably take interest in and want to reach out to subsequently after this event. And I believe he has a lot of gems, a lot of knowledge and insights that he can share with us that'll be very useful for us today. And then Samy, yeah, like always, our CEO at Bujeti. He's a finance guru. Actually, he knows too much about finance and money management. So yeah, this is a great opportunity for all of us, even myself especially, to learn a thing or two from Samy. He basically ensures compliance and smooth operations at Bujeti. Right. So Gerald has also joined us. Everyone meet Gerald. I'm not seeing him on the screen shortly, but I think he will signify and he would let us know that he is available, and then we can basically proceed. All right. So there's also myself. I'm the moderator for today's moderator for today's event. I don't need any crazy introduction. I'm just in the midst of all these people. I'm a small boy, right? So let's. I think we'll set the pace by starting with just understanding what financial literacy is and why it's even important. Why are we having this conversation? And I'm going to put a question to Samy to just basically do an intro. What exactly is financial literacy and why is it important? Samy.
James, hello everybody. Thank you very much for having me today. I'm very happy to have this session with this very high-level people. Why financial literacy is important? Well, I see money and finances as the blood of the human body. So it's the blood of our companies, your companies. So financial management is like the hearts of a company. That's why it's very important. And it's very important. Financial literacy is having the knowledge on how to manage finances, and can help you on 3 different scales, I see. The first scale is analyzing the pasts. If you know how to look at financial reports, financial statements, it's like the storybook of your company. So you can understand how a company is run, and you can analyze what can be improved, what is done well. So you can see really the history, the story of a business through the financial statements. The second scale is managing the present as well. Your financial management process should be, how can I say, a performance enabler. It must be a process that help you to be more effective, to be more productive, and to use your resources better on the day-to-day basis. And the third scale is the future. Financial management is also a tool, a way to prepare, to anticipate the future. So it must help you to take decisions for the next level, the next step of your business. So it's key, it's essential for a business, because it is here to help you to survive, to grow, and to scale.
Interesting. Thank you so much, Samy. But yeah, also still speaking on that, right? From your experience, and even running like affairs at Bujeti, what are like the typical challenges that businesses face, right, in managing their finances, especially in the African market?
I see always the same challenges, not only in African. I think it's even worse in Africa. I see 3 main risks for a business. The first one is liquidity risk. It's a bit obvious, but if you don't have the right processes, the right tools to understand your current assets and your current liabilities, you are almost dead, because you will face liquidity shortage. So the first issue, the first risk is this risk of liquidity, having enough current asset to cover your current liabilities. It seems obvious, but you need the right process, the right tools to be able to have a look at it, to understand it, and to master it. The second one, it's also related to finance. It's the compliance risk. And I think it's obviously even more important in Africa. Being compliant is not an option. Playing with compliance is a risky, very risky game if you want to be successful. Because the day the lights will be on you, don't worry, the authorities will be on your neck as well. So never play with compliance. And again, your financial processes are keys to be compliant. So yeah, I've seen a lot of businesses that's like played with compliance at the very beginning, and they understood very soon what it's not something you should do. And it's very important in Africa because, as you know, regulation changes a lot, sometimes a bit unstable. Even the process to be compliant, even if you want to be compliant, the process to be compliant is quite hard to understand. This is for the second risk I see. And the third risk I see is regarding scaling. It's hard to be anti-fragile, and it's sometimes hard to scale even more in an environment where fundraising is hard. Because when you want to scale, you need funds, you need to invest. And I've seen, not only in Africa, I see it in France as well, some businesses that failed because they were too successful. Imagine you have a big order from a new big client, so you have to invest to buy more raw materials, to recruit more people. If you don't have enough funds, because this big player can come and say, okay, I want the service now and I will pay you in 3 months. So what do you do during 3 months or 6 months or 1 year if you don't have the fundings? And again, if you have the right financial tools, the right financial processes, the right financial models, it will be easy to go to a bank, to go to an investor to ask for money. If you don't have it and you are not a good financial manager, forget about raising money from anyone. So yeah, scaling risk is also important to me.
Thank you so much, Samy. I think a summary of that is that there's 3 major risks that businesses typically face, and not just in Africa but everywhere: liquidity risk, compliance, and scaling. Right. So you need to get like those 3 ingredients to basically be able to run a sustainable or successful business. Interesting. So yeah, Gerald has joined us. Hi, Gerald. Can you hear us? Yeah, Gerald, if you're speaking, can't hear you.
Can you hear me now?
Yes.
Yeah, I think I lost you for a minute. Were you asking me a question?
I was before you came in. I was telling our guests that you'll probably come and tell them why you are Gerald Black. Probably because you're always wearing black, something like that, or black robes and some of the other things that you do.
Okay. So you want me to introduce myself and then explain why I always wear black?
Yeah, that's all right.
All right. Hi, Kola. Hi, Samy, once again. Thanks everyone for having me. Yeah, to answer your question, basically, I think so. Coincidentally, before I joined Black Ops, I was already Gerald Black. Gerald Black is not my official name or given name. It's actually a brand name, right? And it's something that happened because, of course, I love, a lot of techies love to wear black. And then my friends would just tease me back in the days, Gerald Black, always on black. I'm like, that name bangs, and that was how I decided to stick with the name and also make it a brand, right? So over the years, I've pushed that brand, and I just decided to keep the name, because it's a name you remember and it's different, right? It also helps with positioning and intentional branding, right? So yeah, but I mean, other things I do. Currently, I'm very involved in ecosystem building. I work with a lot of stakeholders, both VCs, founders. I help in curating experiences and providing a platform that helps them engage with their target audience, right? So it comes in different forms. It can be in, organizing an intimate dinner or doing intros, warm intros to people they want to connect with, or doing mixers events, also do similar stuff for operators where I bring operators together, so it comes in different forms, right? And of course, I'm also a partner at Black Ops. Black Ops is a community for operate. I started off as a community manager, and very recently I became a partner, right? And what we're basically doing is we're trying to build a community that supports the work that operators do, because operators are literally the backbone of a lot of companies, and they support the work that founders do. Right? We don't really have a lot of support system for operators. And just for the sake of everyone who doesn't know who an operator is someone who is non-technical within the tech context, right? So it's, you can call it a tech jargon, right? But in the tech context, we refer to non-technical people as operators, right? Yeah, so I guess that summarizes it.
Very, very interesting. It's a very strong brand name. Very good name, actually, too. Thank you. So I would quickly ask you a question as we're moving into, how to navigate financial challenges, right? Also, aside from the fact that you've done a bit of stuff with, founders and operators in the ecosystem, you also, had a business, that was acquired. That's, I think, Fix It 45, right? So can you basically tell us how the financial strategies and basic considerations that played a role, in that acquisition at the time?
So I had Packets that was acquired by Fix It 45. Fix It 45 is a spin-off of CAS 45, right? They focus on vehicle after sales services, right? So maintenance, the whole vertical, vehicle after sales. But prior to that, I was running Packets. We're also playing in the vehicle care space, right? And we got acquired by the CAS 45 team, who then started Fix It 45 in 2021. Right. And, to answer your question, I would say, so a lot of things actually played a role. And to be quite frank, right, from the get-go, the goal for us was acquisition from the get-go. People built for different things, but we knew that we wanted to play in the vehicle care space and in the auto tech space, so to say. And there are a lot of verticals when you look at that industry. Anything relating to autos, there are a lot of verticals. We chose a particular vertical to start with, and which was vehicle care. And the reason why we chose that vertical, because there's a lot you can go into. There's vehicle financing, there's refurbishment, there's sales. There are a lot of things. There are a lot of verticals within the ecosystem, within the vehicle or auto ecosystem, right? But we chose vehicle care, and that was because it's very capital intensive, right? I mean, it's a high operation, high capital type business where you need to deploy a lot of resources, tools, but starting off with vehicle care was like a low hanging fruit, right? And we knew that if we wanted to really make an impact, we need to choose one thing and do it really well, right? And then much later, we can collaborate with someone who is, doing something bigger, either get a merger or get acquired by them. And when we looked at the space, we considered who are the players. I mean, who is a potential acquirer of what we're doing, right? The big players then were CAS 45 and a couple other companies outside Nigeria, right? So, like I said, from the very beginning, and this emphasizes the need to always start with the end in mind. What is the goal, right? So our goal was acquisition. And the way we positioned our brand, the way we did everything we did, aligned us, and I'll explain some of the things we did, right? Aligned us with acquisition. And when the time came, it was just very seamless. So one of the things we did was, number one, choosing a vertical that no one was doing at the time, right? And we were very intentional about what we were proposing to the people that we eventually wanted to acquire us. So to cut the long story short, CAS 45 eventually became a customer of ours, because then they had a platform for buying and selling cars. You want to buy, you want to sell, you go to CAS 45, right? And what they did was, when they buy these cars, because then they buy from customers and they bring it to us. And when they bring it to us, we do some work on the car before they take it to their showroom to go and sell, because then they had nothing related to vehicle after sales or repairs or maintenance. We were the ones offering that service to them, right? So they buy the car, they bring it to us, we touch it up, they take it to their showroom and all of that. Now, some of the things we did, which we were very intentional about, because again, we always wanted to get acquired. Number one, our books. We ensured everything was captured, right? From our sales, our expenses, because we knew that when the time comes, one of the first things, as part of DD and due diligence was they were going to ask for financial statements and cash flow analysis and all of that, right? So we were, even as a small business from day one, before we even started getting funds from investors, because we got a couple of angel investors before we eventually got acquired. So even from day one, we started with an Excel spreadsheet, a simple Excel spreadsheet. We had a sheet for income, expenses, very simple. We kept it very simple, but we ensured that we're capturing everything, right? And I don't want to take so much time, but fast forwarding to when they now eventually when they were about to spin off the Fix It 45 brand, and they now made an acquisition offer. Of course, part of the things that were requested for, they requested for our books, they requested for cash flow and all of that, right? And without even hesitating, right? The only thing we did was to get an auditor to come and audit the books, because they want to see audited statements and all of that, right? But the only thing we really did was to get an auditor to come audit everything we had, right? And eventually we got acquired. The whole process didn't take a lot, because we already had most of the things that they wanted, because we would always seek, we always consult people who knew and who had experiences with all the things you needed to have before an acquisition would happen, right? So this is how it happened in a nutshell, right? We planned for it, and we were very intentional and very disciplined with our books, financial statements, and all of that. And eventually, very seamless. The whole process took less than a month, and it happened, right? Unlike some instances when it's time for acquisition, they now start trying to put the books together. We had everything sorted out. We had our taxes up to date. We had everything, because that was what we were looking for, right? So I don't want to take so much time. Yeah, that was basically it.
That sounds very interesting. Building to actually even get acquired as the end goal. Sounds very successful. Samy, I would like to get to you about in terms of managing finances and all of that. What do you advise that what financial metrics? Gerald mentioned things like account statements, income, and all of that. But like what financial metrics should businesses prioritize the most for gauging their business health? And what will help them to position themselves to grow as well?
If I had to choose one, I would say working capital ratio. It's a very simple, very short-term indicator, but it will lead you to understand your business and to look at the right things. So it's one ratio that can help you to see what are the other ratio you should have a look at. So working capital ratio is very simple. It shows you if your current asset can cover your current liabilities. If it's not the case, you need to have a look at your assets. How do you make money? How much you charge your customers? Why does it churn? A lot of different things like that. How I manage my inventory, so I know exactly my current asset, how I'm making money. I have a deep understanding on how I'm making money. And weirdly, a lot of companies are not able to explain it in simple words. Sometimes when you have a complex business model, it's hard to exactly know how you make money. So current assets is very important, and current liabilities as well. Current liabilities, it's how do I spend my money? And you'll be surprised to see how many companies are not able to explain how they spend their money. So if you have a problem with your working capital ratio, it means that, okay, maybe you should have a look at your current liabilities. How do you source your providers? What is the ROI of your marketing spendings, for example? So if your working capital ratio is bad, you need to do some things, but also if it's good. If it's good, it means that you have enough, maybe too much assets to cover your liabilities, so you have cash, you have money. What do you do with that? You can invest it. You have different investment vehicles for a company to make money with money. So this simple ratio is really, really helpful for companies in terms of financial management.
Yeah, that's quite interesting. Kolade, are you with us? Before you joined back in, we're just talking about financial metrics that businesses should prioritize for growth, and basically how you keep your books in your company, depending on your stage. So for you, you have a very interesting experience running a number of businesses, right? Could you just tell us how you've managed finances in those different businesses that you've run, and maybe you talk about what kind of challenges you faced?
Okay, so I think the most important thing for me when managing finances is actually transparency. It's a policy of transparency with the employees, with my coworkers, because in the end, it's a business. It's made up of people, and people often bring the demands of, oh, like I want 36 increase in money, or I want to spend this so I can achieve this. So the first thing, the most important thing that we do is we always show our revenues, our profits, and our costs to everybody. That is very clear that, okay, this is how much we're making, this is how much we're losing, this is where we need to get to get X amount of money for you to spend. So after we've done that, then the most important thing I often look at is runway. So so the businesses I've managed, I've run. The most important thing for me is always, okay, how long do we have with our cash in bank before we can say we are going illiquid or we're going to go bankrupt, God forbid? Because a lot of businesses that I've run are bootstrap businesses. It's only recently that for Fusion Intelligence that we decided to raise some money just to ride out the economic woes. But most of the times we don't get any external capital. So it is always from our revenues that we pay our costs to keep on running. So that runway is the most important thing for us. Anything after that is just okay, that's a nice measure. Then the next thing we also look at is because for this business, Fusion Intelligence is more of I won't call it a subscription type business, but it's more of people pay us monthly, annually. So we often look at the MRR, that's the monthly recurring revenue. And we also look at the ARR, the annual recurring revenue. So because for us, it clearly shows that, okay, this is our MRR. Let's say our MRR is like 5 million naira right now. We need to get to this amount of MRR so that we can have this amount of profit. And then for us, that's important. It's extremely important because of the cost aspect for it. So whilst some businesses, the way they make their money is per transaction, or we make it per subscription. So we already know how much our cost is at the end of this month. We already know how much our cost is in future. I mean, shout out to Naira and Dollar because that thing is giving a very massive headache. And that's the only thing that is making any prediction difficult. But I already know how much it is that we're going to spend in this amount of time. So based off of that, and keeping in mind that we have a runway to look at, to know how much money we have left in the bank to last us in case there's no revenue coming in. We look at our revenue figures to know that, okay, this is how much we're expecting at this time, and this is how much we need to get it. Then there's another very important aspect. The most important, aside from the runway, is actually our cash. So a lot of time, businesses have a situation whereby they are expecting money. So you've signed this contract. On your accrual, you've talked about that this is your 30 million naira revenue on your accrual. However, when does the actual cash come in? When does the money actually hit your bank account? And that's when you have to start worrying, because we had a situation and it was a major challenge for us, I think, in 2022. So we had, let's say, let me give a figure of like 40 million naira in accrual revenue. But when it was time to pay salary for December, there was no money to pay salary for December. And the reason for it was because there was no cash. So the client had been booked on as revenue, but the client hadn't yet actually paid. So we were in this very weird situation whereby, okay, we have money, but it's just not inside our bank account. And nobody, no employee, no co-worker, no vendor is going to answer you if you say, oh, I have the money, but it's just not in my account. Like nobody's going to answer you for that. So those are the important things that we look at. But like I would always stress, the most important thing is actually transparency. Let everybody in the business, from the lowest to the highest, know where the company stands from a financial aspect, so that anytime something gets rough, it won't be like they were expecting. So it won't be like they weren't expecting it. if they had paid attention to the trends of the business, it would be very clear that they're expecting it. So yeah, that's basically it.
Thank you so much for that. So I think what key I took away from that is transparency, which will kind of prompt a question I would like to ask. How do you really maintain transparency? So in terms of like tools, right, for like your company size, what kind of tools do you guys use? Gerald mentioned they kept like as basic as an Excel sheet to just basically have all of their statements in one place and be able to see money that is going in and out. But how do you kind of structure that for the businesses you've run, from your experience?
So I'll try to mention the tool we use is a very basic Google Doc. And we look at 4 main metrics. We look at our revenue, we look at our costs, we look at our profits, and we look at our runway. So every weekly meeting that we have, we put that in a document and say, as at this time, this is what we have. Then the last thing we put in is actually our bank account balance, so that we know that, okay, this is how much the company has inside the bank account. So that's just the tool that we use. A simple Google Doc and communicating during every meeting that, oh, this is how much we have, oh, here now, this is how much we have, oh, this is how much we have. So that's just the skill we use.
That's quite interesting. I said, Gerald, do you have some comments to that?
No, I don't. He had me at bank account. Sounded a bit extreme.
How much do you actually have?
Yes. So you show your team members the bank account and all of that.
I mean, the bank balance, like you don't have access to it, but at least the bank balance.
Yeah, they see the balance.
The management team is very aware. Because, I mean, just to add to that, there have been situations where, again, we have the accrued revenue, but we don't have the actual cash in the account. And then when it's time to pay salary, and there might be a little bit of delay, like if you were not aware of it before time, you would not want to hear any rubbish. But if you were aware of what was going on before time, then I'll be like, okay, I can understand this. And that is actually very important because it affects people's morale. If something happens and you can't exactly pay on time, it affects their output. And with Nigerians, that's when Nigeria now, you do anyhow, you see anyhow. So if you don't communicate and they start doing anyhow, you will definitely see anyhow from Nigerians. So yeah, that's very, very important.
Interesting. So I'll ask a question that will kind of go around, and I'll start with Samy, right? So for businesses that run and kind of dependent on like exchange rates, right? You have suppliers that you need to engage, and you're going to pay them probably in foreign currency. Let's use the USD for example. How do you basically manage that kind of operation where and you have like accrual periods where the money has not actually come, and maybe you need to make some other obligations before your client pays you, or your suppliers kind of fulfill their own end of the chain? How do you manage that kind of operations? Because this the way the currency is going, we don't know where it's going to. So yeah, definitely this has very huge impact on businesses, and even for aside from just the entrepreneur level or the C-level level, there's also the impact is the employees are feeling the impact as well. Operators everybody's feeling it, right? So what kind of advice do you give to business owners, to founders? How do they run their operations in this kind of environment where the currency is the level of instability is very too sporadic? It's hard to follow through.
Well, if I have to be honest, I would say don't keep any naira in your bank. Just keep enough naira for your operations, and the rest try to move it to another currency. But if you cannot do that, it's a good question. It's a good question, but honestly, for the situation in Nigeria especially, it's really hard to tell you. I think one simple thing that it's important to do if you have multi-currency operations, it's to have a way to consolidate your accounts. So you can have an overview of your finances in the different currencies that you have. it can help you to plan and to anticipate a bit. But well, I think also a lot of companies are struggling to make cross-border payments. And in Nigeria, thanks God, we have now a lot of different solutions to do so. It's still hard to anticipate, but at least you have some tools to keep your Naira and make payments in different currencies. So you can have a cross-border operation, cross-border payments as you like. But yes, I think this issue is more a political one. And what you can do, well, what we can do as an ecosystem maybe is to put more pressure on our authorities to make something, to do something to ease our life. But you can also find different insurance tools on the markets. Unfortunately, in Nigeria, it's a bit also difficult. In other countries, you have FX exchange insurance that exists, so you can plan at one month, 3 months, 6 months, 1 year. Honestly, I don't know if the banks in Nigeria can offer that kind of services, knowing the instability of the currency. But yeah, I think it's also maybe an opportunity, new business opportunity in our tech space and the fintech ecosystem to build that kind of solutions, because there is a need. There is a huge need to not play with the volatility, but to cover the risk. And I'm sure we'll see a lot of different startups that will pop up to try to fix this issue.
That's quite interesting. So don't hold Naira. Don't hold Naira, and if you can build build a fintech solution. Okay, Gerald, what do you think?
Yeah, I mean, Samy is right on spot, right? But I just want to add something to what he said, and that is you have to have dollars to even be able to hold dollars in the first place, right? A lot of people don't have access to foreign currencies, right? And they need to start thinking outwards, right? And because of the state of things right now, you need to start de-risking. And one of the ways that you should consider doing that is by expanding to new markets that help you earn in foreign exchange, right? And if you don't have a product you're selling, or you have a service, whatever it is, right? You need to start looking out for how you can get new international clients that can help you earn in foreign currencies, right? Because originally I would have said plan ahead, but even with the rate of inflation, it's difficult to plan ahead with the currency you currently have access to, which is an naira, right? So if you are in a state where you haven't raised, and then you don't have any reserve somewhere that you can use in planning, then you might want to start thinking about actively expanding your products to new markets, or your services, or how you can de-risk, because we've gotten to that point where everybody needs to start thinking outward and being very intentional about how they can earn these foreign currencies. So that's what I'll add to what Samy said.
I think
James?
we've lost James, but yeah, totally agree with you.
James is frozen.
Okay.
Okay, so let me just go next while
Yeah, you
James
can go
is frozen.
next. You can go next.
Yeah. So mine is a bit of a hot take. It's a bit of a controversial take, because I'm of the opinion that the weakening naira is actually a strength, and it actually is in line with what you've said, Gerald, because I'll give us as an example. The very first thing we did was, when we decided to raise, we did not raise in dollars. At that time, raising in dollars was very popular. What am I saying at that time? This was last year. So it was raising dollars was very popular, but we decided not to raise dollars, because when we looked at the economic output, there was a new election, there was a new president coming in. The subsidy was unsustainable. We're just like, you know what, we can't carry dollars, because if it appreciates, that means we have more money to pay back. especially if you're earning in Naira. So we decided to raise in Naira first. Then the next thing we did was we started eliminating a lot of dollar costs. So something like Google Workspace, Gmail, we switched over to Zoho. We're even about to complete that switch today or tomorrow. So we have to, because Google Workspace, I mean, is times 10 the cost of Zoho. And that was at a rate of 1,200. At the rate of 1.5, like times 14. So Zoho, and I'm paying for Zoho in Naira. So I don't need to worry about the dollar cost again. Even our servers, even our servers that we run on DigitalOcean, so it's a fixed cost in dollar. Even that when we started migrating small to Naira servers, Naira service provider, so that at least we are sending in Naira. So the only server cost, the only dollar cost that we have at the moment is just our servers. And we are looking, and I'm constantly looking at it like, okay, how can we reduce this? How can we restrict this? And I mean, it's a very important something. So for me, I would call it always have a Dari, but the Dari is not a DevOps guy. So Dari's job is aside from making sure all our services are running, Dari's job is to make sure that cost doesn't go past a certain amount. No matter what happens, that's his work. Dari and also Sarah, our CEO. So having people that are just watching that cost to make sure it doesn't go up is very important, and eliminate all your dollar costs. Then to what you said, Gerald, is now expanding into markets. So as recently as 2 weeks ago, we expanded into Ghana. So we have our operations in Ghana, and we are not a fintech. So we are a SaaS product. So there is no need for buying any license. There's no need for any physical office on ground. So it was just as quick as a Ghanaian opening this website and start using it. So we're expanding into Ghana. Then we're also expanding into about 10 other African countries by the end of H1. So we are going into Benin and Madagascar, then we're going into Togo, we are going to Rwanda. And again, the Naira is a strength for us because our competitors are priced in dollars. And they are priced as low as $1,000 to $500. I can come and price as low as $500, and my competitor will break an arm and a leg just to be able to compete with me. So I'll just come in, I'll enter that market, I can charge you $500, $300, and I am now earning dollars. So I now have dollars in my DOM account, while most of my costs is in Naira. So that dollar in my DOM account, I'm now using it to pay for my servers as in dollars. So hopefully, I mean, this plan has to work because it's not that way. So hopefully by the end of each one, all of our dollar costs wouldn't be a problem anymore because we are earning dollars to offset that cost. So yeah, that's basically how that's the best way to deal with the dollar problem. As Samy said, as much as also not hold on any Naira, you need to reduce all of your dollar costs, like efficiently cut it down, religiously cut it down, and then, as Gerald said, you now have to start expanding into new markets because the Naira is an advantage. It's a cheap currency. It's a major advantage.
Yeah, I think these are very very strong gems dropped. I think we'll have a few questions to go. But on the audience here, if you have questions, you can drop them in the Q&A. Jesus Christ.
Absolutely.
Yep. Don't talk. It's ready.
We can hear you.
Okay, yeah, I was saying let's drop some questions at the Q&A, right? If we have any questions for Gerald and for Samy and for Kolade as well. Right. So one more question from me, really. So just around recommendations, right? What do you advise? I'll start with you, Samy. What do you advise for different businesses on how they for business owners and finance teams on how to manage finances in different type of companies, where we have startups, we have SMEs, and we have larger enterprise companies as well. What would you recommend should be like the ideal financial stack at like different stages of a company? Or should they just maintain the same maybe Excel sheets, Google Docs, and maybe supporting tools at all stages, or what basically are your recommendations for financial management at different companies? Samy, I think you're muted. She's speaking.
Yeah, sorry. Yeah, I think we can see two different things. In terms of tools, of course, it's difficult to have the same tools when you grow, but you should look at different criteria. You can be a startup, an SME, a big corporation. We have always the same criteria that are important to me. The first one, your tools must be easy to use. If you use a new tool, it must be better than your current process. As I said before, financial management should be a performance enabler, not a hard process that is lengthy and cumbersome. The second criteria is interoperability. You should not feel any friction in your financial process. I see a lot of companies that use Excel sheet for budgeting, Zoho for their internal workflows like approvals and all, and then they go back to banking platform to make payments. And you see a lot of frictions. So you need interoperability between the different steps of your financial process. So easy to use, same for easy to use. I see a lot of SMEs that use SAP. For SAP, you need to have a PhD to understand how it works. So it's not adapted to all scales. And the third third criteria is scalability of your tools. You should, from the very beginning, use a tool that can help you to grow with you, to support your evolution, that evolves with you. So when your processes are getting more complex, you can use the same tool because you have this. It's customizable enough to fit with your the complexity of your processes. Now, more generally, in terms of financial system, financial stack, in my opinion, we have also three main things. You need to have the right people, you need to have the right process, and the right tools. So the right people, if you are a big company, of course, you need to have a superstar CFO. But if you are SME, you cannot. But, well, you can find a way to have the right people. You need only one guy who knows the lingo of accounting and finance. And then you find the right accounting firm or finance firm that will help you. So you have your finance team and CFO outside of your company, and you have one guy who is the middleman and can understand the lingo of these guys. So you have the power of a big financial team without having to pay them directly. That's for people. For processes, I like what you said, Kolade, regarding transparency. I think you can be startup, SME, big enterprise. You need to create a financial process that is based on transparency and control. Transparency, you see it as like showing your bank statement to your employees, but it's also for you to be able to understand exactly what's happening in your financial processes. Knowing how you're making money, how you spend your money, transparency is the key. Every naira you spend or you earn, you know where it comes from, where it's going, where it's going. So transparency is key, and control. Obviously, you need to be able to control everything. If a naira goes out, you need to know it and to be able to say yes or no, with approval flows, with spending limits, with whatever, but you need this process. And obviously the right tools, as I said, a tool that is interoperable, easy to use, and scalable. That's my advice, James. I don't know if you're still here.
I think James is frozen. Okay, James is frozen.
Right.
Okay. You guys can hear me, right?
Yes.
Yeah, we can hear you now.
Yeah. So that's a general question for Gerald and also Kolade. What do you guys recommend in terms of stack? We also have some questions that we will take from the audience.
Gerald, you go first.
All right. So, judging from my experience, right, because the in terms of what stack to use, and I mean when we started off, we kept it very simple. But then you begin to realize that, just like what Samy mentioned, you start getting a lot of frictions in the interoperability of these different platforms, right? Because for us, for example, when I started my company, we kept it very simple. All we did was we met with an account advisor that gave us templates. So we got templates for different things, and for income, expenses, account, and all of that. We had different templates, right? But as the company started getting bigger, and then of course you have to keep track of your invoices, and you have to keep track of different things that happen, end to end, right? It becomes really difficult, right? So you have to now start looking for tools that have the ability to connect and work with themselves, right? So that you can keep track of all the processes without having to have breakages or a lot of manual processes, because it's very crazy, right? So I think that's what I would just add to that. So being very conscious about tools that have the ability to connect with each other, and also being able to give you seamless workflows, right?
So I think just building on what you guys have said, it's basically keeping it simple is very, very important. Keeping it simple and cost effective, because there are a lot of times when the financial planning tool you are using is now more expensive than the amount of time it would take if you did it manually. Like what Samy said about some people using SAP. My mouth was a bit open when he said SMEs are using SAP, because SAP is expensive. It's expensive. So keeping it very simple and seamless, and also cost effective. Cost effective not just in the amount of money you're paying, but cost effective in the amount of time. Because if your organization has to spend 2-3 hours on payroll, to be able to pay out payroll, which is a problem Bujeti actually solves, for your expenses, that's a waste of time and money, because those 2-3 hours could be spent on something a lot more productive that will bring you money. So in terms of the stacks that we used earlier, I mean, Excel is everybody's best friend. You can never go wrong with Excel. Like, you just need to start with it, and then from there, once your organization gets larger, once you have a lot more organizations, like when you have your accounting department that's different from your procurement department, that's when you can now start using tools that will be able to simplify the whole thing. So that's basically it. Excel and anything else. That's not SAP, by the way. Just I'm not a hater, but just SAP is just too expensive. Just me.
Okay, so basically start with the simplest tools. Make sure they are efficient, and you're not spending too much money or time even trying to figure out how to use those tools. And use templates like Excel as basically as you can, depending on your stage. And then when you get more like departments and you need to specify, use Bujeti. Shameless plug. All right.
Yeah.
So yeah, we have some questions from one is coming from Israel. He says that hiring the services of an accountant could be expensive at the start of a new business, right? So what digital tools can you recommend for financial accounting? I think we kind of answered this, but let's ask Gerald.
Can I take that? Can I quickly take that?
Yeah.
Go ahead. Please go ahead.
So it might be expensive, but I think you should do it. It might be expensive, but you should do it. Because of, so when we started, we did two things. We had an accountant, and we also had a tax consultant, just so that we could get some savings on our tax and have the proper tax strategy when moving forward and trying to scale the business. So, in as much as you can use digital tools, there's a reason why they are accountants, why they spent 4 years, 4, 6, 8 years doing this stuff. They know it more than you. They can give you a lot of savings and insights that you don't have to do. So if you can just spend some money to just get an accountant's time, maybe like 1 or 2 hours in a day or in a month, I think you should definitely do. That's the route that we use. Just to pay for an accountant.
So yeah, Samy or Gerald, do you guys want to kind of hammer on that a bit? Because I'm hearing, get an accountant and have a tax consultant, even if you're not hiring them, but you can speak to them. Yeah.
Well, I always say if you are serious with your business, you should have like your banker, your accountant, your lawyer should be your best friend. And even if it's a bit expensive, these guys are really business partners, and you should choose them wisely. So they are really your business partners and not just service providers. As I said, if you are serious with your business, you need to invest some things, and don't play with accounting, don't play with tax, don't play with legal issues.
Yeah, so let me just add that, as someone who bootstrapped at the very early stage, I know it can be a bit expensive, especially when you don't have the money and you're using your personal funds. And that's where building relationships now come to play, because I've always leveraged relationships. Always, anything I do, I always make sure I have a guy, that knows one or two about what I'm looking for, right? So one of the ways you can, navigate through this your question is by first off ensuring that you have someone you can always go to direct you on some of the free tools. I mean, Excel is always everyone's best bet because emphasis is on new business as a new business. So, you might not have the money to pay for services or pay for tools, right? But if you have the right templates, you can still effectively carry out some of the things that you're trying to achieve on free tools like Excel and the likes. But it all boils down to the templates, because that was what really helped me at the very early stages, because we bootstrapped until we got some funding. And I can tell you that I had friends who were accountants, and I was stealing templates from them, like, send me templates for this, bro, please, I need this, like, send it to me, like, So you need to leverage relationships. It also comes, very important.
That's interesting. So I think we're all saying the same thing. You need to keep, these people within your corner, one way or another. If they're your friends or you're consulting with them or you hire them, but you need the knowledge to navigate the complexities of running a business, right? The accounting side, the banking, and the compliance side, which like your lawyer or your tax consultant. Definitely, you need to have them on hand. If you're not any of these things, if you're not a banker or a lawyer yourself or an accountant, with all of the knowledge. Somebody is asking if Excel is truly free. There's Google Sheets, which is like a same mirror of Excel, which is also basically free.
You didn't hear that from me. Excel is not free. You didn't hear that from me.
Excel is not.
There's Google Sheets. You can start with Google Sheets.
It's basically the same kind of software. Yeah. That's interesting. So yeah, we're kind of approaching close. I think we've been able to share and learn a couple of things. I think I'll just ask if for any final notes, right, for business owners, for entrepreneurs, for founders that are trying to run business, especially in Nigeria, right? What do you think is like the best advice you can give to them? Okay, there's also another question coming in, but yeah, we can take this and move. Starting with Gerald.
Sorry, can you take the question again? I lost it for a minute.
Okay, I'll come back to that because it's like a closing question. There's another question here by Jeff. He's saying that how do you manage an accountant and make sure they are adding value as a non-finance person who is a CEO that does not have knowledge and without knowing a lot of people in the finance sector?
I think let Samy start. Samy will be in the best place to start.
Okay.
Samy, please.
Okay, I will use it also as my final notes. I think it's a very good question. Of course, it's hard to be a financial expert in 2 months, but the knowledge is here now. You don't have any excuses to understand at least the basics of your finance. You have YouTube, you have internet, you have everything to understand an accountant. You cannot do your books yourself, but you can understand what an accountant will tell you. So if you don't have enough knowledge to master your finances, learn. And it will be the same for all the aspects of your business. If you don't know how to sell, learn. If you don't know how to source your partners, learn. And yeah, my final advice, not only related to finance, is guys, you have all the resources that you need to learn, to build your business, to think big. So that's on you now.
Interesting. Gerald and Kolade, did you guys want to add to that?
No, I was going to I have something different, right? So I was going to, say something different to wrap up. So if Kolade wants to contribute to that, maybe he can go ahead.
I will, because personally I have a deep hatred for accounting. It's a very fascinating for accounting. So this question speaks to me a lot. But there are some very important things to know. There's a fundamental question the accountant needs to be able to answer. How much money are you making? The accountant should be able to answer. How much is your cost? The accountant should answer that question. You should be able to answer that question too. But how much is your, like, how much is your profit or loss? How much do you have on your balance sheet in terms of your cash, non-tangible assets? If your accountant can answer those questions for you on time, then the accountant is giving you time. If your accountant can answer those questions for you, then it is in the accountant. That's frankly my old rule of thumb for it. So because an accountant job is mainly to give you information that you're going to use to run your business. So if they can give you those small things that are very important for your business in a day or a week, depending on the complexity of your business, then you need an accountant.
Okay, interesting. I think that'll be the final question because we need to wrap up. So if anyone has any follow-up questions, you can still reach out to us, the guest. I'll drop maybe 1 or 2 emails in the chat box that might be useful for you if you have any follow-up questions for us. But yeah, just closing notes. I think Gerald, you said you had some closing notes, closing recommendations. So yeah, let's go.
Yeah, so I figured a full-on question to what we had earlier mentioned about diversifying your income, especially looking outward, start earning forex to basically de-risking your business is how do you do that without having to spend a lot of money, right? Because just like Samy also mentioned, expansion is expensive. And having to go to new markets is also very expensive, right? So I think I just figured I should also add 1 or 2 ideas that people can consider when looking to get to new markets, right? And one of them would be specific use cases, right? Because a lot of times people go to people who can even afford it. One of the reasons why they get they get burnt badly is because they go without a plan, right? So they are going with the intention of going to figure out what's existing in that market, right? As opposed to looking for specific use cases, sourcing partners earlier, sourcing people you can build relationship with, and thinking about what is that product I can build, who is the partner I can build it with. Like for example, if you're in the fintech space, you're thinking about instead of acquiring a license, how can we partner? Who can we partner with? Is there a market we can serve? As opposed to building a product for everybody, right? So you are going with a use case, and then you are going to serve, of course, with partners that have local knowledge and understand that terrain. You're going to serve that particular market, right? And if it's service-based, I mean, you can offer your service from anywhere in the world. And one of the key ways is for you to intentionally look for, ways you can build relationship with people that can introduce you to those new markets as well, right? So, for example, are there communities that exist that have coverage in these markets? Are there platforms? Are there events you can attend to connect with locals in that market as well? You know, so all of these things are things you can consider as opposed to literally going on ground and trying to figure out things as you get there, right? So, I mean, emphasis has always been on what I was saying, the steady rise in inflation, and you know things are going south. You have to start thinking outwards, right? And I just felt like it would be very useful for anyone who is considering, you know, doing that to get one or two ideas on how they can actually achieve that without it being very expensive if you can't afford it, right? So I think I'll end on that note.
Thank you very much, Gerald. Closing for you, Kolade. You're muted, Kolade. Okay.
I think my closing is basically for the last question that you put in there. For the final question, I think the most important thing for an entrepreneur is not to give up, especially in this period in time. Have it in mind, there's a period where you should definitely give up. But if you really believe in what you're trying to do, I mean, it's you that would know. And not just from your own perspective, you need to speak to other people that you trust, people that you know have your back. And you lay out the information in front of them like, oh, this is big busy, I'm inside right now. The economy is bad. I've not paid people money. People are costing me every day that harvest their money. I'm giving a pretty graphic picture because believe me, I've actually seen that experience before. And then you have to ask yourself, oh, should I continue? Should I not continue? So it's basically for every entrepreneur, it is just to keep on going. Because most times business is about who lasts the longest, not who is the fastest. Because there are a lot of businesses. I mean, I can still remember the time of everything.com when there was an e-commerce boom in like 2014 to 2015, and how across various cycles, there's always a business that's big, that's classy, but then the fundamental businesses that are lasting, they are still there. So it is just not to give up, just to keep on hanging on. But at the same time, you should know when to quit. If it's becoming too much, there is honor in going out. There's honor in going out when everything is too much for you. But if you really want to stay inside that market, you just don't give up. You just keep on going.
Interesting. So don't give up.
But
Sam,
when to give up.
yeah.
But know when to give up.
Don't give up. All right, Samy, closing for you.
Yeah, don't give up and learn how to manage your finances. Financial management is not a secondary activity for a business owner. It's very key. As I said, it's the heart of your business. So you need to know how to send the right resources at the right place at the right time.
Great gems. Great gems. So yeah, I think we'll end on this note. I would like to thank Gerald, thank Kolade and Samy for sparing us the time to give us, you know, so much knowledge from everything they know and have done. Just follow on from that. Any other follow-up questions you can send to us at marketing@bujeti.com. You can also reach out to Gerald, Samy, and Kolade on their own like socials if they would be willing to provide them or drop them. You can them to pick their brain on some more things around what they know and what they do, right? And then for you know, we've talked about different types of stacks and how to basically manage finances. So yeah, after the webinar, we're going to, you know, from Bujeti, we'll be sending some templates, some accounting templates that might be useful for you know, business owners to also be able to use to manage theirs. And as well, you know, if you got into that stage where your teams are also expanding and you need to now start allocating resources efficiently outside of just your Excel sheet and making payments from your bank, definitely you should use Bujeti, right? Because, you know, that's the cusp of why we are here. And we have, you know, various tools and features that will allow you to do a lot of things that are scalable, right? You know, even if you're managing your finances, like, you know, Gerald mentioned, if you're building your company to get acquired, and even if you're just building your company to make profits, and you need help. You bootstrap to a point where you need support. You need to get money from investors. They will always want to see how you're managing the money you already have before they, give you money. And you can do all of this, automated and very simplified on Bujeti, right? And in every like metric you will check, pricing and just efficiency and all of that. Bujeti is
any freebies for attendees today?
Oh, definitely.
Give me away, boss. Give me away.
They use the if they use the referral code Gerald. we have one or two things for them. They just mentioned it came to this webinar, and we'll be good to go. So we'll just be signing out on this note. Thank you everybody for attending, and we'll make this recording available if there were some sections that anybody missed on our channels, and you get like the follow-up emails. It's been great. My name is James, and thank you very much for attending.
Thank you very much, guys.
All right, we'll be closing.
Bye.